Happy Friday, everyone. Today is August 7th, 2026. And as the kids head back to school this week, we are taking a moment to get back to mortgage basics. I'm Robin Hart of CMG Home Loans. And over the next 3 minutes, we are going to cut through the noise and cover things like rates, the brand new jobs report that came out today, along with housing industry adjustments, global macro events, and why real estate remains a premier long-term wealth builder for you and your family. So, diving in, rates. Rates have been on challenging as of late. Well, after years of low, steady rates, borrowers seem to be kind of cringing both at the gas pumps and the daily rate sheets. So, according to Mortgage Nuggets, an online source that averages from over 200 lenders across the United States, 30-year fix is coming in at a 7-day average of 6.77%, while the 15 years averaging about 6.3%. VA and FHA are hovering over 6.3, while the jumbo is coming in at 6.9. Now, there is a housing market squeeze right now. That's that's actually making home buyers and homeowners a bit uncomfortable. That was an uncomfortable sentence. Basically, contract cancellations, they are at their highest since 2017. Pending home sales are at a 5-month low, and there is an illusion that there is a seller surplus. This all amounts to massive opportunities in the market. Think Tesla stock lowers. Guess what? It's opportunity in the marketplace. All right. Now, these markets are a bit of a mixed bag of tricks, but let me explain. The narrative that the Fed has no choice but to hike rates is actually dead. The labor market is on a trending path downward and kind of cooling. So we'll discuss that more later. And while the Iranian on-again, off-again crisis or war or blockade, whatever you want to call it, it's no longer a romantic rom-com anymore. It's actually more along the lines of the movie The Breakup. So it's actually pushing higher energy prices, keeping lingering inflation fears alive and well. So what's happening is this sort of seesaw. Lower job market, worse job market, actually improves rates. Iranian conflict is raising rates. So it's sort of like Gen X's seesaws with the hot steel that nobody enjoys sitting on. How about that? All right. Now, Iranian conflict continues to be the storm that appears to be brewing. And since the conflict started, mortgage rates have jumped up over 1%, while gas prices have also jumped up approximately $1 per gallon of gas in most places. So also not very fun. So in light of the chaos, here's the chart that tells most about housing, stocks versus real estate. Market volatility, real estate offers lower risk. In asset utility, you can actually have a place to live in, and people always need a place to live in. So it is a tangible place to put your money. Now, in leverage and control, you as an individual homeowner can hedge and leverage the asset. Only from what I know, billionaires can kind of leverage their stocks, but it has to be massive quantities. So as an average daily consumer, it kind of becomes the holy grail of assets in challenging times. So how about that? All right. Zooming out, when short-term news is terrifying, you want to take a look at long-term data. Stocks react violently to daily headlines. Residential and real estate, not quite as much. Now, here's the thing. Everybody tells me, oh, but you'll miss the peaks. Well, most people actually miss the peaks except for their long-term investments like 401ks, all right? Most of those peaks are only experienced by hedge fund managers and other people. Now, also on those peaks, keep in mind that the higher you go up, the more you come down. And if you stay along a healthy trend line of averaging up, most of the time, you won't have missed the excitement and mostly the mail-ox. So I trend towards the expression, your life should be exciting and your investment should be boring. How about that? Now, today we received the July jobs report, as I mentioned, and the headlines were weaker jobs data. So instead of adding 83,000 jobs as expected, the economy unexpectedly lost 23,000 jobs. Now, that's 100,000 jobs difference. And previous months were also revised sharply down. Now, this shift has completely altered the Fed's expectations with the odds of a September rate hike. It's actually below 44% now, and a slower labor market actually cools inflation, which is potentially very favorable for future mortgage rates. That's right. Now, clients ask me on a daily about macro events and the ongoing conflict and involving Iran and then energy cost and inflation and the Fed. It's a lot of nonsense and a lot of noise. And while these global headlines absolutely drive daily rate volatility, it's your personal economy and micro indicators are what truly matter. So if your personal income is steady, your credit is in line, and your savings are ready, those are the factors that dictate real buying power and potential to make real estate a good investment for you. Now, each week I do have a good time in real estate. Lately, I've been hearing a lot from listing agents and buyer agents about unreasonable sellers or sellers who really are turning down solid offers on their home. Now, if you find yourself possibly in that position or asking for a friend, please note these 3 steps that you might want to start chatting about with your realtor. Number one, how is my pricing compared to nearby homes that are currently available on the market? Not 12 months ago, not 24 months ago, not even 3 months ago, but currently available. Number two, presentation matters. Be easy to show and easy to flow. And that means basically allow open houses, allow showings, and make sure that the environment looks good and clean and removed of clutter. Now, number three, finally, marketing matters. So video sell, get a video showing the home, hire a professional, have it done. It's a worthwhile event. And if you need help navigating the noise, it usually requires a guide, so we'll help you. My whole team and I, we work hard every single day to help people. Thank you so much for the positive reviews to our clients. Let's build wealth together. If you've got hankering or questions about real estate, give me a call. Robin Hart, Home Loans with Hart.